Hello class, let's review the accounting cycle. So first we analyze the financial event or the transaction. We're going to record that transaction in the general journal. We're going to post it to the general ledger and we're going to prepare an unadjusted trial balance. Okay? And that happens every single day for the month. And then at the end of the month, we will analyze the account balances. We'll record the adjusting entries in the general journal. We'll post the adjusting entries to the general ledger, and we'll prepare an adjusted trial balance. Now don't forget, the adjusted trial balance is used as our checklist, correct? As our checklist to prepare the financial statements. And every account type is shown on, is only reflected on one financial statement. So we're going to prepare our financial statements in this order. Our income statement, which is our revenues minus our expenses, which is going to give us our net loss or our net income. We will use that amount to prepare our statement of retained earnings. Our statement of retained earnings is going to show us the change in retained earnings for a given period of time. So we're going to start off with our beginning retained earnings balance, plus or minus our net income or net loss, less our dividends, which gives us our ending retained earnings balance. We're going to take our ending retained earnings balance and prepare our balance sheet, which is going to be our assets. Those need to equal our liabilities plus our equity. And remember, our equity will be our capital stock plus our ending retained earnings balance, which came from the statement of retained earnings. Okay? The final step in the accounting cycle, or final section or segment, if you will, in the accounting cycle, will be to record our closing entries in the general journal, post our closing entries in the general ledger, and prepare a post-closing trial balance. Now remember and I can't illustrate this, so I need you to kind of just think about it for a second, okay? Remember when we did we had the accounting equation and we had the extended accounting equation, which was assets equals liabilities plus capital plus retained earnings. You might want to write this out while I'm talking. Plus retained earnings minus dividends plus revenues minus expenses. And in class, I drew lines to show you how the how the revenues minus expenses gave us our net income or net loss, and how that would be moved into retained earnings, and how our dividends would also be moved into retained earnings. Well, stop and think about it for a second. Your statement of retained earnings is doing just that. Now, what we need to happen with the closing entries is to make our general ledger balance for retained earnings equal the amount that's shown on the statement of retained earnings. Let me say that again. What we're going to do with our closing entries is to make sure that our general ledger balance for retained earnings equals what's reflected on the statement of retained earnings. What's reflected on the statement of retained earnings is ending retained earnings, but that amount was calculated. It's not showing up in the ledger. So we need to complete the closing entries to make that amount show in the ledger for retained earnings. Okay? So how do we do that? Let's go over that. Okay? We're going to split our accounts into two types: our permanent accounts and our temporary accounts. Our permanent accounts are those accounts whose balances transfer from one year to the next. So what that means is whatever we ended the year with is what we're going to start the next year with. Think about it like this, right? You go to a New Year's Eve party, and someday I might redo this lecture with video lecture with actual images and pictures. It'll be kind of fun. But anyway, let's say you go to a New Year's Eve party, right? Oops, sorry.